All right. Good morning, everybody. Good morning, Neil. uh, Here we are. It is Wednesday, December 20th, 2023. I'm going to go ahead and shift back, take a look at what happened here yesterday. Yeah, let's scrunch it up here. So we talked about having really no signs for the bears on the high time frames when we came into the market yesterday. We talked about seeing a potential bearish signal up off the overnight highs. And I told you guys we have to get below the holy orange power level in order to get any confirmation that that hourly signal might get some follow through. The market opened and we held right above it, right? So I told you guys this shallow pullbacks, we get clues for the pullbacks. They're typically shallow. And I told you in our pre-market, this little area right here is most likely going to be the area of support if it holds. If it doesn't, I told you guys if we end up getting down through this hopeful, we will have our first confirmation of that hourly bearish signal that could lead to a little bit more of a deeper pullback than what we got coming into the open right there. But what happened is we opened and we held right off like textbook. In fact, the beautiful double bottom bullish divergence right few moments after the market opened there. And if you would have bought that first support, I think that was basically it. If you missed that, you had opportunities to buy the FMA aggressively. Of course, I'm not necessarily always an aggressive trader myself like that, but it did hold FMA all the way up. Interestingly enough, peter out for the biggest pullback of the morning there, right off the scaffolding. And then once they got up above the scaffolding, continued on this very aggressive ride up the FMA. Textbook pullback. Not only was it a pullback to the 200 yesterday, guys, great opportunity right there, but it was also that previous support from the morning. So we got rejection, again, just a couple ticks up above our scaffolding level. And then once they broke out, they pulled back right to the 200 and that previous resistance. We see this happen. How many times do I show you these same things when we get breakouts one way or the other? Pull back right to that previous resistance. So there were beautiful opportunities here. I mean, if you just bought the pullbacks to all of our levels, in fact, I forgot to mention, we also had a great level. Actually, I take that back. That's from today. But there was also, let me get rid of this for a second. This is what, 17,148. We also had the high of the day before that was tested to the tick as we were breaking out, right? So there were just so many opportunities. There's VWAP. You could ride the FMA. You could wait for the pullback to the high of the day before and the 200, right? And then here again, once we broke out more, there's your resistance. There's your 200. I mean, just beautiful opportunities with no freaking risk. Went 5, 10, 15, 20 points, and then finally kind of petered out at one point. So if you missed out the morning rally off VWAP here, if you missed out on that and you missed out on these beautiful pullbacks, by the time we got to about 9 a.m. Pacific to noon, right around lunchtime, it just completely petered out for a while. So you probably would have gotten chopped in here. There was a beautiful opportunity here as the market was failing from this high. And by the way, I'm pretty sure, let me just look back. I don't want to misspeak or anything. Is it 48.17? Yeah, we had a bunch of bearish signals. So if you were watching the 3-minute chart around noontime on the East Coast, we had this very textbook kind of peak above and fail right from that previous high with that 3-minute bearish signal. And then we got down through the 200 for that textbook pullback to kiss the back end of the 200. So there was a great short opportunity there. Again, didn't really go anywhere and chopped around, but that would have been a great little trade there. And then, again, can't really say much about the chop here. Just kind of chopped around. And then finally, right at the end of the day, where did we pop to and make our high of the day? Well, let's just pull up our 60-minute chart so you guys can see this. Our next expected resistance area, major resistance area on our chart, we've got these zones that we highlight, right? So today we've got one down here. As the market was pushing higher and higher and higher, we had a zone here that they just cut through in that crazy rally higher. And the next major area I gave my traders was to target, from the bullish side here, target somewhere between 48.19, 48.20, 48.21. Well, what was the high of yesterday? Let's go back here. The high of yesterday was right there, right in between it, right off our swing level that I gave you guys. So, in terms of if you were being a bull, I gave you this target to the upside, which they just ripped on through in that crazy rally. And then the second major expected resistance was going to be up here at 19.20. And sure enough, look at what's happening. We pulled back barely to the tick off of it yesterday. So the high of yesterday was basically that level, right? You can see our red line here today, right there. And now you can see we peaked through it in the overnight session and pulled back. So the very area I warned you guys as being the major resistance on the upside is exactly where we pulled back and now just tested and pulled back in the overnight session. So if you ask me, really can't get any better levels, any better biases. But let's go ahead and jump up to the higher time frames here and do our pre-market for this morning.